Starting soon, the Monday Market Highlights podcast will be exclusively available on Milford's new podcast channel called On Track with Milford. Search On Track with Milford on your podcast app and tap subscribe so you don't miss out on any episodes.
You're listening to the Monday Market Highlights brought to you by Milford.
Good morning. It's Monday, the 29th of May, and I'm Roland from Milford. The key economic news came out on Sunday as apparently a deal to raise the US debt ceiling has been agreed in principle. Details are still filtering through, however it looks like the debt limit is suspended until Jan 2025. This still has to get through the House and the Senate, with many more details to be released. Sticking to the US, core PCE data was released, increasing 4.7% year on year, slightly ahead of 4.6% expected. Remember, this is the Fed's preferred measure of inflation. On a monthly basis, the big surprise was consumer spending, which jumped a significant 0.8%. In addition, second quarter GDP estimates were released, pointing to 1.3% quarter-on-quarter growth versus 1.1% forecast. These two stronger than anticipated data prints saw US yields jump higher across the board as expectations for further rate hikes increased. The US dollar rallied against most major currencies last week. The RBNZ raised interest rates 25 basis points, which was expected. However, the commentary highlighting they were at peak rates was a surprise. Many expected the RBNZ to point to more hikes ahead, and therefore the dovish tilt saw the New Zealand dollar fall 1.2% against the Australian dollar and 2.3% against the US dollar. UK inflation accelerated, increasing 8.7% year on year versus 8.2% expected. Core inflation also accelerated to 6.8% versus 6.2% expected. UK 10-year gilt yields ground higher to 4.3% to end the week almost reaching the peaks in September last year as the market expects more rate hikes to be necessary to tame inflation. In Australia, April retail sales data was released, coming in flat month on month versus positive 0.2% expected. Household goods were particularly weak. In addition, both the CommBank and ANZ spending data was released, both of which corroborated a slowing in consumption. Turning to equity news, the world was focused on the Nvidia quarterly result, given it being considered the best proxy for the AI bubble or boom we are currently in. The result did not disappoint, with the second quarter revenue guidance coming in a massive 50% ahead of expectations. Nvidia was up 24% on the day and is up 167% this year alone. Universal Stores, the Australian apparel retailer, provided a trading update which came in well below market expectations. They highlighted that sales had slowed markedly since April as the cost of living crisis was pinching their consumer cohort. Analysts downgraded earnings for next year by 20 to 30%. Universal fell 24% on the day. Webjet, on the other hand, had a very strong result, with NPAT 8% ahead of expectations, citing strong European tourism demand. Fisher and Paykel Healthcare released their FY23 results. However, the focus quickly turned to their guidance, which came in over 10% below consensus. This was primarily due to much higher OPEX growth than anticipated. Fisher and Paykel fell 6.5% on the day. Turning to the week ahead, the focus will be on any updates around the debt ceiling, including further details on compromises each party has made. Also in the US, non-farm payrolls are to be released for May, where total jobs are expected to increase 195,000, and the unemployment rate is expected to come in at 3.5%, slightly up on 3.4% in April. Thanks for listening. We'll see you next week.
Don't forget, this podcast is moving to Milford's new podcast channel. Search On Track with Milford on your podcast app and tab subscribe so you don't miss out.